following is a presentation of TFNN. The Tom O'Brien Show is produced every business day. Tom takes your phone calls toll free at 1-877-927-6648. Internationally at 727-445-1044.
We got Carlos from California. Carlos, what's happening?
How you doing, Tom?
I'm doing great,
How are
man.
you?
Yourself?
Oh, very well, thank you.
That's awesome,
Thank
man.
you very much. Can I make a comment real quick?
Absolutely.
For me, it's a real challenge every time I'm doing a trade. And thanks to your help, I've been able to done a lot of things as far as trading. And I know there's a lot of Hispanic people who's listening, and they think this is a lot harder than it looks. But with your help, it's been a lot easier to make things sound very simple.
That's a beautiful thing, man. Well, listen, we appreciate it. We appreciate it.
Now, Tom O'Brien.
Welcome, folks. This is Tom O'Brien of TFNN. We go 5 days a week. We go 10 hours a day. We go 24 hours a day on the internet at TFNN.com. Always remember, folks, whatever you think about, you bring about. Whatever you focus on grows. Hope everyone's having a great day, safe day. Let's make it a great night, folks. To begin a great relationship, know what you want. Know what the needs of your body are, what the needs of your mind are, and what fits well with you. There are millions of men and women. Some of them will make a good match for you, and others won't. The two of you only need to be like a key and a lock. A match that works. Market-wise, let's take a look at it out here. We have the Dow Industrials up 88. NASDAQ is up 6. S&Ps are up 8. Gold contract down $4.70, trading at $1,325 an ounce. Silver up 5 cents at $19.22 an ounce. Platinum flat at $1,027 an ounce. Light sweet crude up $3.20. No, at $2.20 at $46.92. You talk about volatility in the oil market, folks. Has it all. We'll go through that. Price spread wise, the Saudis and the Iranians are saying they have a deal. We'll find out. Bottom line, they got a deal today, though. It popped oil about $2.50 in about 10 seconds. Bonds. You have the 10-year note down 2 ticks, 131.14. 30-year bond off 3 ticks, 169.11. King dollar up 33 ticks, trading at 95.34. The euro is trading at $1.12, and the yen is at 100.69. Our phone number is 877-927-6648. Give us a call, folks. Want to know what's going on in your world. In the world of the S&Ps, let's take a look at them. What do you have? It's going to be a fun close out here, folks. So, the SPY, thus far, this is what we've had thus far. The SPY had a low out here today of $214.71. You had a high of $216.60. And what it's doing, folks, is it's going into the gap that was left on Monday. So the number you want to watch real closely is $215.88. You know, bottom line, if you close above that level, that will go for the top of the high of last week, which was $217.53. The Dow Industrials. So Dow Industrials, right now, I get the Dow up $82. The Dow has been as high as 18,336. So it's been up just over 100. Dow is doing the exact same type of setup. The Dow thus far, let's see, so 343, that's interesting. Okay, so the number we're dealing with in the Dow, it would have to come back down to 18,254. So that'd be quite a sell-off coming into the close. But you can expect high volatility right into the close out here today. The reason being is if we go over and we look at the futures first, we'll go into the E-minis. What you're going to see inside the E-minis is that the E-minis, they took off when the announcement was out that the Saudis and the Iranians had a deal going. That was at 10 past 2. Now the high, we're at 2160 right now in the future. You get back inside 2159, let's say 2158, you can be right back down to 2152, which would be a total mind blow, because what you'd have the pop forward, you get the expansion, you got all of it. The S&Ps and the Dow have every right to stay up at these levels. If they don't stay up at these levels, that's going to be trouble in paradise. Why? Well, if you go over to the NASDAQ yesterday had rejected lower price. The NASDAQ is in its higher trading range. We have the composite right up now, up $5.05, 50 cents rather. The high that the composite is testing out here, or going after, is the high that was established last week, which is the 53.42. Right now, we've hit 53.16, and the low of that day, by the way, is 53.20. So, we'll see whether it closes under that level, because that would be a test also of the low of the high. The NDX 100, now that's the composite. NDX 100, what we have with the NDX 100, NDX 100 right now is up $3.40. That level there, that would, let's see, so 48.76. And right now, we hit 48.74. Gold contract, what do we have with gold? Gold contract price spread out here today. Excuse me, folks. The high was 13.31. The low was 13.21. We've done 140,000 contracts. That's not an expansion of volume. That's some decent volume. It hasn't been able to hold price. Gold has to get up and over about the 13.28 in order to get into higher price once again. Silver, we go take a look at the silver contract. Same type of setup in the silver contract. What silver has is this. Silver actually isn't getting much traction, which is pretty wild. So silver right now is trading up 7 cents. We're at $19.23, and it just can't hold price. So I expect more sideways movement. Notes, here we go. Now the notes and the bonds, folks, they look to me like they just tested the high again and they failed. So this is going to be wild watching this shake out. The 10-year note, we hit 131.20. You've done 950,000 contracts. Well, it should be doing about 1.2, 1.3 million contracts. Thus far, you close under this 131.14, even 131.18, and bottom line is you got a failure. That's in the 10-year. In the 30-year, and this is where it's going to get interesting, meaning in both the notes and the bonds, the 30-year got to a price point of 170.03. We're at 169.09. The 30-year didn't make it to its downdraft. The downdraft where the 30-year and the 10-year had started was on September 8th. The top of that September 8th level in the 30 is 171.01. So when I start putting this together, this is where it's going to get wild. And what it is that you got a failure inside the bonds. The question would be, is this. What has happened, like in the last 6 or 7 weeks, the bonds have been tricky. They broke down on September 9th. They went higher. As they went higher, the market was getting croaked. Now, that was a different correlation and relationship than we've had in the marketplace. That's what I think we're going to see out here, though. That, once again, the good old 10-year and the 30-year is going to go south no matter what is happening and take this market south once again. Going to be wild watching it. King Dollar. What do you have with King Dollar? King Dollar out here, folks, building more cars. King Dollar's sideways move out here today. Did 14,000 contracts. Not a lot of juice under it, not a lot of price underneath it. Bottom line, we need wide price spread, accelerated volume for higher price in that U.S. dollar. You stay right there. We're coming right back. You get another 45 minutes, and you can expect this volatility to continue. Dow's up 79, Nasdaq's up 4.5, S&Ps are up 7.5. We're going to be right back.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. Until recently, it was almost impossible for the average investor to hedge against currency risk in Europe or Japan. For a bold trade on Europe or Japan that protects against moves in currency, trade HEGE or HEGJ, 2 times currency hedged leveraged ETFs from Direction Investments. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Tom takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. 877-927-6648. Let's go take a look at what the oil announcement was out here. So let's bring this up. Where are you? Oh, battery. Okay, so let's see what they have to say. OPEC, this is the news, folks. OPEC agreed to cut production for the first time in 8 years, according to the delegate briefed on the matter, sending oil prices up more than 6% as Saudi Arabia and Iran wrong-footed traders who expected a continuation of the pump-at-will policy that the group had adopted in 2014. In 2 days of round-the-clock talks in Algiers, the group agreed to drop production to 32.5 million barrels a day. The delegate said, asking not to be named because the decision isn't made public yet. Sure, folks. That's nearly 750 barrels a day less than a pumped in August. So we'll see where this whole thing shakes out. What it did do, there's no two ways about this. This put a bid under oil. Oil's done 944,000 contracts. And bottom line is that what is intriguing here is that what it didn't do, I wouldn't expect it to hit it one day, but it didn't, it has to get to the swing point, which is at 48.38. And the way that it moved today, the expectation would be that, yeah, it could get to that swing point because you are moving with conviction. It has a wide price spread, it has the volume. If we go over to the XLE, you want to see a move in the XLE. This was pretty amazing. So the XLE moved $2.60. And what's going to be cool about this is that the XLE is not done going down yet. This came off a high of 71 bucks, traded down to 66. It's been building costs for quite a while. ExxonMobil, and this is going to be a deviant deal too. And it's the same type of setup, meaning that you have the wide price spread. You get volume behind the move, but yet you do not get to a swing point. This is always dangerous when this happens. Now, we'll see whether we can get to it tomorrow. ExxonMobil is up $3.16. You're at 86 bucks. Now, this is down off of 95. All it's doing right now is coming into ice. And that move was extraordinary because the move was when the announcement was done. When you talk about a large cap stock, So check this out, folks. They have been going up all morning, but in the matter of that announcement, it went from 85.10 to 87.23. I just think this through for a second. So that's $8 billion in 5 minutes that are put into a market cap. $8 billion. You got to love it, man. 877-927-6648. Let's go take a look at the NASDAQ. What is unusual out here today, folks, is that the NASDAQ, well, here, percentage-wise, this is what we have. Percentage-wise, you have the Dow Jones up 0.4%, the S&P up 0.4, and the NASDAQ Composite's only up 0.1. If we go take a look at what inside the NDX, the strength versus the weakness, this is what you have. The strength out here is INCY, that's up 4.3%. Expedia is up 2.5%. Viacom is up 2.3%. And Pace Car is up 1.6%. Taken away from it is Paychex is down 4.4%. You have Micron Tech down 3.7%. Mylan Pharmaceuticals off 2.7%. And Baidu is down 1.9%. If we go take a look at the Dow Industrials, strength versus the weakness, what we have is this. Let's see. Strength is Caterpillar. It's up 4%. ExxonMobil is up 4%. Chevron's up 2.8%, and Merck is up 1.3%. Taken away from it on the way down, you have Nike down 4.2%. This is McDonald's 1.6%, Coke 1.1%, and Verizon is 1%. If we go over to Nike and take a look at Nike, you know, Nike came out with great numbers. They beat their numbers in a big way. But what also happened is that they had future orders aren't coming in how they would like to come in. So if you take a look at Nike, you know, Nike's going after this high volume swing low that's been hanging out here, 51.47. And you take that out, Nike would get all the way down to this 47 mark. So Nike has some work to do. CTAS, now this is just the opposite. They came out with numbers last night. This is up $2.86. This is finishing an ABC structure on the way up. You know, you're at 116. It's approximately about 121 where that ABC structure would finish out. And that structure started in 2014, which is pretty wild. Very long ABC structure. Some of the higher volume stocks out here, you have Procter & Gamble is up 95 cents. You have Twitter down 67 cents. Weatherford is up 30 cents. You have, let's go see where Amazon is. Because what we're going to be, oh, there, look at Amazon, man. That's a monster. Amazon's trading at $828. And if we just go back 2 weeks ago, it was $756. Amazing. And you're coming up to the holiday season. I mean, Amazon right now is going to be banging out some big, big numbers. In fact, I saw yesterday what they were doing. They're going to come out with a stream, and they're going to lose money, a music stream this is. They're going to lose money on the stream because what they want to do is they just want to get into everyone's house. Because the stream is going to work like as does the Echo. And what I read about it is that it's a lot easier than the streams we have right now, meaning changing stations or types of music you want, all of the above. You just talk to it. It whips right through. What do you want? Jazz? What do you want? Rock? What do you want? Symphonies? Tell me what you want. It pops it right up. But guess what? You know, what's also going to pop right up is all the orders, you know. Send me this, send me that, send me this. It's a beautiful thing. Let's go over to the banks. So Wells Fargo, they're going to claw back $41 million. Well, they're not clawing back. The guy, it's hard to tell whether it's a clawback or, in fact, he's just giving back $41 million. This is the CEO, so that he keeps his job. That's just the beginning of their problems, though, because California just came across. Is it California? Let's see. California spends Wells Fargo from its bond investing work. California, the nation's largest issuer of municipal bonds, is barring Wells Fargo from underwriting state debt and handling its banking transactions after the company admitted to opening potentially millions of bogus customer accounts. The suspension, in effect immediately, will remain in place for 12 months. Bottom line, that's That's some money, no doubt about it. As when I was just bringing up Amazon, someone had said in the den that Amazon wants 1,000. I remember quite some time ago, I forget who it was, saying the Amazon's going to 1,000. It's only a couple more days and we're probably there. It's pretty wild. You look at Amazon. So Amazon, this is amazing. So Amazon started the year off at $286. $286. That was January 23rd of. Oh no, hold on. We're 20. That was 2 years ago. 2 years ago. This is Tom O'Brien. This is TFNN. You stay right there, folks. We're coming right back. Dow Industrials right now up 75. Nasdaq's up 4. S&Ps are up 6. Bottom line, folks. 33 minutes. I don't think this market's going to hold. Volatility's here. Pretty wild, man. Stay right there. I'll come right back.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
If you're looking to discover a new financial resource and diversify your financial portfolio, consider the new Market Safe Focused Commodity CD from Everbank. This 5-year U.S. dollar-denominated CD gives you exposure to 6 equally weighted commodities, including gold, silver, copper, nickel, soybeans, and sugar, in one powerful CD. With annual pricing caps of 50% per component, you could earn up to a 50% upside payment at maturity if the commodities increase in value across annual pricing dates. And should the opposite occur, your principal is 100% protected. Keep in mind, returns are based on CD performance. There is no annual percentage yield or periodic rate of interest on this index CD. Don't miss out. Take advantage of this financial resource designed to grow with the times. The October 13th funding deadline will be here before you know it. So hurry over to everbank.com/TFNN for the CD's term sheet and other important product details and disclosures. Once again, that's everbank.com/TFNN. This advertisement is sponsored content. Everbank is a member FDIC.
Hi, I'm Steve Rhodes, host of the Trader's Edge, heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. The Dow right now is up 75. You get the Nasdaq up 3. S&Ps are up 6. If we go over to that SPY and we take a look at the SPY, we're at 216.20 right now. And the number that we're looking at is 215.88. So this is going to be pretty interesting watching how this baby shakes out. Now let's go over to our man, Mr. Darryl Martin, as we do each and every Wednesday at 20 past the first hour. Don't forget, folks, Darryl, Tommy, myself, we got a great show every Monday and Friday, 10 to 11 Eastern Standard Time. The Nadex Bull Bear Binary Option Hour. You can get it right on your cell phone. So no matter where you're listening right now, in your car, remember that you can just go right on your cell phone. You go to TFNN.com, inside your browser, hit Tiger TV. You're going to get some great HD video as well as audio. Daryl Martin, what's going on?
What is going on, man? How you doing?
We're doing great, man. Well, we got volatility all over the place out here.
Got it in space, man. It's coming in. We got some nice runs, and but smooth, like good volatility, not just crazy volatility. So I like it.
It is good volatility. The oil market is a whole different animal. If we look at this oil market, folks, CLX6, what you have is that 10 past 2. The Saudis come out and say they're going to deal with Iran. They're going to pump 750,000 barrels less every day, and oil goes from 44.38 to 46.82.
Oh, there they go. They finally decided they wanted to get some more money in, right?
That's and the yin and the yang of all of that. A couple of the tigers in the den, they were talking about it. It is. I can see this too. Is that okay? Are they in such dire straits that they realize that they have to basically pull back, or at least tell the market they're going to pull back in order to get prices up and keep them up for a while? So it's going to be interesting watching.
Yeah, because they've been like, we're not going to do anything, we're not going to do anything, we're not going to do anything for a long time now.
The last 8 years. So the last 8 years, they've pumped as much as they can pump. And, when you get... Hey, we'll find out. That's the bottom line.
I'm just saying, like, haven't they been making the big statement, though, like that we're not going to change our pumping or we're not going to hold anything back for quite a while as oil's dropped down really low?
That's right. And this is definitely a change of statement. They've officially, as of yet, it's not official out here. Okay, you know how this whole deal goes, folks. What ends up happening, they sent someone out to talk with all the press, of course, and supposedly they don't supposed to say that this is off the record. Give me a break, off the record, right? they just
you're talking about it. It's on the record.
Yeah. Well, you know what, Daryl? I brought up ExxonMobil, and in that 10-minute time span, ExxonMobil went up $2, which market cap makes it come up $8 billion. How's that?
Wow.
Isn't that sick?
Well, we're gonna have. If the price goes back up, the drilling goes back up. A lot of things go back up.
Well, the first thing that I thought of, and this is where this gets wild, folks, is that if in fact, Tommy and I, when we were doing the show this morning, oil was down first, and Tommy's saying, "Oh man, I like cheap oil." I think we all do. I like cheap gasoline. I mean, you can fill up with less money. It's a big deal, and we're at the aspect now. The Fed, is Fed going to go up or not go up? Bottom line is that. If, in fact, they can hold oil prices and gasoline prices higher, that 2% level inside the inflation level will go at over 2%. Because right now we're right underneath it, and I think we're a lot higher than that anyway. But the bottom line is oil is a big component of it. And if that oil goes higher, and that would mean that interest rates are going up. So.
Hey, interesting. So
it's going to throw a lot of things in the fire at the same time, man. Do you know what I mean? It really is.
Right.
And folks, if you haven't test drove the Nadex platform, it's a great time to do it. I mean, you talk about volatility, and the oil contract, folks. This is the perfect situation where you're taking defined risk. I've seen oil move like this before, but very seldom do you have a move from highs to lows of like $4, which we've had today. $3. That's $3,000. But from you gotta
love that.
It's
that's a lot of opportunities out there. On Nadex and everything else. You can go out there and you can trade. That makes some people like me and you want to hop in with both feet, right?
Yes.
But it also makes some people really nervous because that's $3,000 of movement on a single contract. And the nice thing about Nadex is you can go in with that defined risk.
It's huge.
You can trade these highly volatile markets and really learn how to take advantage of these big moves without, just completely exposing yourself without that capped risk.
Right. And what also, which is really cool, in the same vein, is that when you have a volatile market like this and you're back and forth a million times, if you're in the futures market, you can't take that type of heat, period. So you always should have your stop in. You have two different traces. If you put your stop in, you get a volatile market like this, you're probably going to get stopped up whether you're a bull or a bear, back and forth. The difference in the Nadex platform is you can use the stop, but you're already going in with the defined risk, and it's a shorter term trade, so you can stay in that trade because you don't have that type of risk, which is, and it can come back in the money, which is just total mind blowing. Well, and this was actually, this listen to this. This is what's so crazy. This happened today inside the oil market, folks, because oil popped before 2:30, when oil closes inside the Nadex platform. Isn't that wild, Darryl?
Right. Yeah.
It popped at 10 past 2, and at one point, when the oil numbers come out this morning...
And then at 2:30, it just chilled out, yeah.
Exactly. When oil came out this morning, bottom line, it couldn't hold price. So you had the API numbers that come out this morning, folks. Oil couldn't hold price. You could have been wrong in the aspect of that trade. If you had the 2:30 one, the daily one, not the 11 o'clock. And if you listen to us in the morning, we trade the 11 o'clock one because we're not looking for the premium. But bottom line, pretty cool, pretty amazing.
Good. But so now, what is with this kind of volatility? I mean, are you big on the spreads or on the binaries? And I know you're starting to play with the weekly binaries too, with these big volatility moves going on as well.
No, I on a move like this, I love the spread, because what happens is this. Like for me right now with oil, well, actually, the S&Ps too. But with oil, when you get a move that is this extraordinary, folks, right? And we haven't hit a swing point. Well, guess what? I love something when it just went up $3.50, hasn't hit a swing point. It's like, okay, on the news, and is it going to be real? So I would do the spread and I'd sell a spread, because I'd be trying to sell a spread as close to the high as I can, because you're talking about a very small defined risk versus what can happen if you just do a 50% retracement of the move as it went higher. And thus far we've already, from the highs, we're already down another 75 cents just as we're talking, Darryl.
I mean, it's just like flying around. And it barely even looks like it's moving. So
I know. It's pretty amazing, man. There's no doubt, and I suspect. The way the markets are trading right now, it looks like it's going to stay that way.
We may continue to get this climb on going on as people are thinking about, okay, well, supply's about to start going down, price is going to go up, which will increase our drilling over here. Which being in Texas, there's a lot of people that affects out here.
Oh, it's huge. Listen, I'm sure they're crossing their fingers in Texas. In the Midwest, up in Canada, there's no doubt, man, because the difference is dramatic, and the amount of folks that get out of business is dramatic too, man, and there's no doubt.
Let's bring some of them back.
Okay, well, listen, you have a great one, safe one, of course. I look forward to speaking to you on Friday.
All right, talk to you then.
Stay right there, folks. We'll come right back. Dow right now is up 83. Nasdaq is up 3.5. S&Ps are up 7. We're going to be right back.
TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now, you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile-based scanner in the industry. Powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com. Tiger Real Estate Opportunity Fund is currently offering 4-year first mortgages on many of the fully renovated properties that it has purchased. The first mortgages are third-party appraised with a maximum loan-to-value ratio of 70%, providing a secured investment that pays a fixed return of 5% annually, which works out to a monthly income of more than $416 per $100,000 investment with your principal intact and secured. These 4-year first mortgages are perfect for anyone looking for a secured investment that provides monthly income much like a CD. For more information, email tigerfund@tfnn.com or click on the Tiger Real Estate Opportunity Fund banner along the right side of the tfnn.com homepage, or call our office directly at 877-518-9190. There's a limited supply, so act now. The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find the Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Tom takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Tom O'Brien.
Welcome back, folks. The Dow right now is up 91. The Nasdaq is up 6. S&Ps are up 8.5. BlackBerry. It's hard to believe, folks, that BlackBerry announced this morning they are going to stop making their smartphones. There's a company that first out. I mean, if you've had a BlackBerry, you know what people used to call them crackberries. Bottom line, that's it. No more BlackBerries. They haven't been around. I haven't seen one for quite a while anyway. But bottom line is that you snooze and you lose, and they snoozed for way too long. And they just let these other companies overtake them. Now all they're going to do is they're going to be selling software. Pretty amazing when you actually think about it. Volume out here today, we're dealing on the NYSE. You're at 637 million, so we'll get about 800 million in the NYSE. On the Nasdaq Composite, we're dealing with 1.4, so that'll bang in about 1.8, 1.9 billion shares. We take a look at let's take a look at some of the large caps. Actually, let's go to GE, because GE has been hammering its lows here, and GE's off a high of $33. You're 29. It's trying to get into this high volume swing low from Brexit, and the longer it stays down here, the higher the probability that it's actually going to get into it. Let's go take a look at Walmart. Now, Walmart's on the other side. Walmart's been at these highs for a while. It's had a sideways move for quite a while. We're at $71.64 right now. Walmart has to get over $73.69. That's where Walmart broke down from. It broke down last August. Man, it's hard to believe that the time goes. We're going to be going into October. How crazy is that? It's pretty intense. There's no doubt about it. Let's go take a look at the financials. The XLF. Now, the XLF still can't get out of its way. This is going to be wild watching this shake out. So the high in the XLF last 6 months has been $20. You're at 1930 right now. The XLF is trying to get into how it gapped when it gapped down. That gap down is $19.35, and right now we're at $19.30. You've done volume of 31 million, and the gap away is 59. So it looks to me like these banks are going to continue to have more problems. We go to Bank of America. You get a bounce. That's up 5 cents. No big deal there. J.P. Morgan. So J.P. Morgan, anything over 65.92, which J.P. Morgan is over, that's in a higher range. Not much is happening there, but that is in a higher range. Morgan Stanley, we take a look at MS. That also is in a higher range. That's trading at 31.75. Oh, I see. It's still going into ice, though. Amazing. Yeah. So 34 bucks. This is not going to make it either. These are all dead cat bounces. Actually, when we look at Morgan Stanley, yeah, Morgan Stanley reached as high as 41. You're at 31. It reached 41 last July. And this thing can pull back to, 26 pretty easily. Pretty amazing. Let's go to the SMHs. So the semiconductor index out right now is still hanging at these highs. 1.2 million shares. The last high up here had 3.1. The high we're talking about is 68.30. Right now you're at 67.48. Let me see this for a second. No, you're not United Technologies. Well, United Technologies, take a look at United. United doesn't have any juice underneath it. Let's go over to Ma Bell. I think the Ma Bell's trading at 40.79, down 67 cents. Wrong window. There we go. My God. Sorry about this, folks. I need to get a next break. I got to put a battery in my mouse. It's getting weak. Okay, so Ma Bell off the high of 43. Yeah, this is a small ABC down too. Actually, it's a pretty large ABC down. It's a complex ABC down. The A point on this is 43.48. The B's 40.60. So you get $3, which gets you to 38. We've hit 39.55. 877-927-6648. Let's go over and take a look at the XAU, the HUI. So both the XAU, HUI, they got a little bounce going out here. The XAU is up $2.37. And we'll see what how the volume is on this baby on the bounce. I don't get that till later. The HUI, that is up 368. Now the HUI, for yesterday that was actually stronger. It wasn't coming down as hard, but today that's not getting as much juice as the XAU is, which was really deviant. If we go to the GDX, which is the Market Vectors Gold Miners ETF, this got to a low today of 25.86. Now it's trading at 26.86. And how this comes into the close is going to be crucial because thus far, you got a nice move topside. Each and every time that they've been moving topside, what they haven't been able to do is hold price as they're coming into the close. You've had a lot of basically pushing of equities out as we've come into the close on many of these equities. We do want to take a look at the XLB. Now, the XLB, this is the materials sector. That's trading at $47.74. And this is going to need more juice. So that's coming into a downdraft. You get a dead cat bounce going. Let's go take a look at the U.S. Steel. So U.S. Steel's up 86 cents, $20. The steel companies look like they're going to get some action here. I don't expect a huge amount, but they come off that low. Well, they should, because like U.S. Steel just came down from $27. It went from $27 straight down to 16. 15. Man, that's a hit. That's pretty intense. So even a dead cat bounce, though, can take it up to this $23 level. We get over and take a look at the E-minis as we come into this close. E-minis right now, they're trading right where they were when we started the program. You're up $10. And we'll see if they're going to try to make a run higher right into this close out here. The Dow Industrials, that's up $100. So the Dow hangs up here, that means that the highs of last week are game once again. And what it's really going to try to do, folks, it's the September 9th downdraft. That's your benchmark out here. This is Tom O'Brien. This is TFNN. You should stay right there, folks. We'll be coming right back. Dow Industrials up 106. NASDAQ's up 10. S&P's are up 10. We're going to be right back.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Welcome back, folks. The Dow right now is up 112. You get the NASDAQ up 12. S&Ps are up 11. Bottom line, folks, if we go over to the SPY, we're going to go get another test of the gap. So it's the September 9th gap. That's going to be the number. When we gap down on September 9th, the high of that is $217.03. Right now, the SPY is at $216.70, so there's no reason it can't go for that once again. Dow Industrials, inside the Dow, the number on the Dow is going to be 18,404. And right now you're at 18,340. Because you're right into, you got right by the gap. That was a small gap that was established on Friday. So that gap is alive once again. And the last time that we were up here, let's see, on the 29th of September. So this is what we did. 29th, no, it couldn't have been the 29th of September. 26th of September, 1 second, let's see here. IMDU. Oh, 9th of September, that's what it was. Okay, so let's see, 1 billion shares on the NYSE we did then, and on the NASDAQ Composite we did 2.2 billion. So it's going to need some juice to get into that. What it does have going for it right now is that you have the NASDAQ is above that area. And bottom line is that the NASDAQ's either going to pull up the S&Ps and the Dow Industrials, the Dow Industrials and S&Ps are going to fail once again and yank the NASDAQ down with it. What the market does have going for it right now is that tomorrow starts window dressing. You have tomorrow and Friday, and then coming back next week, the first Monday and Tuesday. So window dressing, you get the last 2 days of the month, the following 2 days of the month. And let me just get that calendar in front of me. Yeah, that's how it's set up. 29th and 30th, and then you're dealing with the 3rd and 4th. And that's when, of course, money comes out of accounts. And, most times you don't have to go up in that level, but most times you are going to see more buying versus selling because of the aspect that it's coming out of people's paychecks. It go into the accounts, and money managers don't get paid on the accounts, folks, unless the money is in the marketplace. That's how this deal shakes out. We had a question at the beginning of the show about Deutsche Bank. If Deutsche Bank blew up, what would it do to the bond market? Well, first, I don't think Deutsche Bank's going to blow up. What I did hear out here this morning, which basically I would say that was inaccurate. They had a analyst on from Germany, and they were talking about Deutsche Bank, and they were talking about, well, they thought, if it did go down, it wouldn't be a big deal because it's only one bank. That's insane, folks, because all these banks are intertwined. The banking structure, the way the banking structure is laid out, is that most of us do not know who the counterparties are to what all this money is owed and where the derivative exposure is. That's the largest issue with banks. It's not like how much money is in the bank. All these banks don't have any money, particularly in Europe. So the government can come in and bail them out. What can't get bailed out, and well, it can get bailed out, but that's when it gets extreme, is the derivative position on the other side, meaning that the bank is taking a bet, and they have thousands of them out there. That is where the next company can get hurt, and that's where the regulators don't know how many of these companies are. And so when you cut to the chase there, after our debacle in 2008, my take is that they won't even let Deutsche Bank get close to going out of business. They won't even. It's just not on the table, because they know the results of it, and the results are a freaking disaster. You stay right there, folks. We'll be coming right back. Dow Industrials are up 116. NASDAQ's up 13. S&P's are up 12. We're going to be right back.
The following is a presentation of TFNN. The Tom O'Brien Show is produced every business day. Tom takes your phone calls toll free at 1-877-927-6648. Internationally at 727-445-1044.
Let's go to Asim in Dallas.
Hi, Tom. I love your show.
Thank you so much.
I've been listening to you since 2001 from my Seattle days when you were on a little station there.
I appreciate you growling and prowling with us out here, man. Thank you. Well, listen, thanks for bringing us from Seattle to Dallas, man. Appreciate it.
Yeah, I love all the hosts. I love your show. I'm addicted to it.
That's Hotel California. It's wicked, isn't it, man? Thanks.
All right, Tom, nice to talk to you.
Have a great one. Have a safe one.
Now, Tom O'Brien.
Welcome, folks. This is Tom O'Brien of TFNN. We go 5 days a week. We go 10 hours a day. We go 24 hours a day on the internet at TFNN.com. Always remember, folks, whatever you think about, you bring about. Whatever you focus on grows. Hope everyone's having a great day, safe day. Let's make it a great night, folks. Pretty wild. We're kicking into the end of September. Cultivate wisdom. You don't need to accumulate knowledge to become wise. Anyone can become wise. When you become wise, you respect your body, respect your mind, and respect your soul. When you become wise, your life is controlled by your heart, not your head. Make it wise! guys, let's take a look at it out here. We had the Dow Industrials up 110, Nasdaq up 12, S&P's up 9, gold contract down $4, trading at $1,326 an ounce. Silver up 9 cents at $19.25. Platinum up $2, $1,029 an ounce. Copper up 2.5 pennies at $2.19 a pound. Light sweet crude up $2, $46.67 a barrel. Now, the oil market, folks, was a wild ride, and that wild ride brought some strength right into the Dow Industrials. You had the Saudis and the Iranians make a deal. They make a deal now. There's an official statement out right at 4 o'clock that they would be altogether, OPEC in general would be pumping 750,000 barrels less per day out. You know, we'll see what the price is going to hold, but bottom line, in the past, each and every time that they say they are going to pump less, they haven't been able to do it. This is, though, the first time in 8 years that they have actually said that they're going to reduce production. Prior to this, bottom line, they just kept pushing. So, first, you had them pushing. The frackers were calling uncle. Many small companies had to call uncle. Now you get the large companies calling uncle. Bonds, 10-year note, down 3 ticks, 131.13. 30-year bond, down 5 ticks, 169.09. The 10-year note tested its swing high, couldn't handle it. 30-year bond didn't get to the swing high. The swing high that we're talking about is the downdraft from September 9th. So the way that looks to me is that once again, you're going to have the notes and the bonds go south, and we'll see what that does for the market. King dollar up 23 ticks, trading at 95.33. King dollar has continued to reject lower price. Last couple of days, you just did a sideways move. King dollar needs some real price strength with volume behind the move. Euro is at $1.12, and the yen is trading at 100.68. Our phone number is 877-927-6648. Give us a call, folks. Want to know what's going on in your world. In the world of the S&Ps, let's take a look at it. What do you have? Okay, so we're up $1.07. You traded at $216.64. You make it through the gap from Monday. That is saying that now you're going to go right after the gap from September 9th once again. Now, that's where the S&P and the Dow Industrials had failed on September 22nd. The NASDAQ and the NDX 100 got over it up to a whole nother range. So we're going to do this once again. I suspect it's going to be done tomorrow. That's the number you want to keep your eye on, and keep that eye on it in spades, because it's a high volume bar. Last time we were up there, they sold the heck out of the S&P as well as the Dow Industrials. We take a look at the Dow Industrials. Dow traded up $110. You're at 18,339, and the number that we're looking for up there where the test is 18,404. We had made it on last week we made it up to 18,449, then we gave it up. The composite, the NASDAQ composite. So the composite didn't have as much strength as the Dow and the S&Ps today, but the composite yesterday rejected lower price. The high in the composite is 53.42. Bottom line, I suspect it's going to go for that high. What it did out here today is that it went for the low of the high. And if we go take a look at this, so that's the 22nd versus today. The 22nd, we hit that high with 1.9 billion. Today it did 1.7 billion. Inside the NDX 100. NDX 100 traded up $8.50. We're at 48.75. The high that it's going after is the 48.95. What is intriguing in both cases is that it hit the low of the high and hasn't made it through it yet. Gold contract. What do we have with gold? From highs to lows in the gold market today, folks. High was 1331, low was 1321. We did 143,000 contracts. I suspect what we're going to see first is that this swing low of 1305 is going to go after that. You break that, we're going to be down into Brexit Day. And the Brexit Day, June 24th, is still the benchmark on many of these indices out here. Okay, so bonds. This is where it's going to get really wild, because if we look at the 10-year note first, what you have is that the 10-year note got to a price point today of 131.20. When we broke down, folks, we broke down from the 131.14 level. And, we went down hard. At this point, you're one tick underneath that, and volume-wise, are about 400,000 contracts underneath that, so it's a big number. Well, you're 300,000 contracts, light. The 30-year bond, the way the 30-year is set up, 30 years already failed. The 30-year couldn't make it up to the highs of that downdraft, which is $171.10. We made it to $170.03 today. So the bond market is still saying a different, still has a different characteristic than the S&Ps, the Dow, and the NASDAQ. And what it is this. So bonds have been tricky about the last 7 or 8 weeks. What they've done is that they've come down hard. They've made it all the way back topside again, meaning rates have stayed low. The 10-year right now is at 1.568. And then they fall apart again. So let's go over to the TLT. If you take a look at the TLT, which is the 20-year bond fund, what you'll see when we fell apart, you fell apart on the 8th of September. The TLT comes down with 14 million. You go up at 7 today, and it failed. That's telling me that we're going to be right back downtown. What it's also saying is that it very well may just be the bond market going up on rates that will hit the market once again. King dollar. What do we have with king dollar? So what we have with king dollar is this. Sideways move. You had 14,000 contracts. Not bad. Not great. The greatest thing about king dollar is that the last few weeks it just keeps rejecting lower price. It's going to need more juice in order to get up into this level of 97.61 where I do expect it's going to go. That's the swing high of July. You stay right there, folks. We'll come right back. Dow Industrials finished up 110. NASDAQ up 12. S&P's up 10. We're going to be right back.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. Are China A-shares hot or not? If you trade China A-shares, now may be time to take a closer look. Trade CHAU or CHAD, Directions Daily CSI 300 China A-share Bull and Bear ETFs. China A-shares in either direction. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Tom takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. 877-927-6648. You had Janet Yellen today, folks, up on Capitol Hill testifying, and parts of that, here, let me just bring this up because you talk about, it's amazing how they can just push, let me find this for you. Here we go. Okay, so Federal Reserve Chairman Janet Yellen said her agency has started a review of the disturbing compliance failures at the biggest U.S. banks after lawmakers pressed her Wednesday over revelations that Wells Fargo and Company had opened scores of bogus customer accounts. This is her quote. "We are taking a comprehensive look at the biggest banks," Yellen said in a testimony before the House Financial Services Committee, referring to a disturbing pattern of recent violations. Recent violations, man. I mean, it's 2016. They're still paying billions of dollars of fines for 2007. She declined to respond to the most heated question about Wells Fargo, including whether the Fed should consider breaking it up. Among the Wells Fargo questions, she wouldn't take the bait on whether missteps involved more than $2 million improper accounts showed the lender was too big to manage. She declined to address the San Francisco-based bank specifically, except to say it's important to hold senior management accountable. The Fed's review will encompass a variety of compliance concerns after breaches, including mortgage abuses and the bank's manipulation of benchmark interest rates, Yellen said. So check this out, folks. So the mortgage abuses blew up in 2007. We're 2016. The interest rate, the manipulation of the interest rate was the same area, but they didn't find out about that. That's the LIBOR rate until basically 2010. So, you know, this has been going on, well, what's that, 11 years, right? Now, here's the best part, though. This is what bureaucracies do on a continual basis. Last week, Yellen told reporters that Wells Fargo's misconduct occurred within a part of the bank that is primarily regulated by the Office of the Comptroller of the Currency. So, out of one side of her mouth, she claims that, yeah, they're going to basically look into something. On the other side of her mouth, she says, guess what? It's not our department. It's the, and they had this whole, not fight, but as to who, when the debacle in 2007 and 2008 was going on, one side was blaming the other also, because they're regulated by both of them. She said regulators have been distressed about the industry's response to the recent problems, adding that a focus for the Fed for next year or so will be insisting that management prevent compliance failures and ensure that employees are always acting in a legal and ethical manner. So you can see, bureaucracy-wise, just how bizarre that is, okay? So I got to say that again, okay? This is her quote. By insisting that management prevent compliance failures and ensure that employees are always acting in legal and ethical manner. So when I hear that statement, that's saying that the employees are the ones that did everything wrong. Folks, you don't have 5,400 employees doing the exact same thing. That'd be like, so picture that you have a big gang and you're sending 5,400 people out to go rob banks or something, okay? It doesn't happen. And it's like, you have well, let's do it this way. You have 5,400 people and you say, okay, let's go rob 2 million people. Do you really think that it's the 5,400 people that were doing it? It's not even close. I mean, it's so bizarre. And the way where I got those numbers from, by the way, folks, is 5,400 people got fired, and The reason they got fired is that they said that those 5,400 people are the ones that opened over 2 million fraudulent bank accounts when the folks didn't even know that the bank account was opened. It's hard to wrap your head around that too. It's hard to wrap your head around that can be done, and no one talks about anyone going to jail. You know, I mean, people go to jail every day for fraud. It's like that's fraud. That's what it is. There's no doubt about it. Okay. So the CEO today, gave up, I believe, $41 million. He's going to Congress tomorrow, I believe. So he gave it up before he was going into Congress, and I suspect that he's figuring that maybe that'll help him a bit. But what is also going to happen is that the state of California just took away Wells Fargo's rights to bid on their bond business for a year. You know, it's just a never-ending deal. I get tired of speaking about it, actually. You know, but we have to stay on top of it, because if you don't stay on top of it, what ends up happening is that it'll just get worse. It's bad enough people staying on top of it, and then the amount of soft money that comes into Washington, D.C., you know, just gets rid of it. Hey, listen to this one. This is crazy. Okay, so I want you to think for a second, no matter where you are, because this is going to be off the wall too. I think it's going to be off the wall for most of us. It was off the wall for me. When we take a look at our economy, and you take a look at the amount of soft money, okay, lobbying money that goes into Washington, D.C. So lobbying money, bottom line, really bribery, right? It's legal bribery. You know, the big companies get all their bread together, push it into the Senate, push it into the House of Representatives. And by the way, which is so easy, you're talking about what, 435 in the House of Representatives, 102 in the Senate. Pretty easy, right? Okay. That being said, what sector do you think spends the most amount of money in Washington, D.C. on a lobbying level? And I'll tell you, it's not only just the sector, but when you hear and it affects just about every single one of us. But this was off the wall to me when I heard this. Okay, we got in the den, we got one saying bankers, and another one bankers and drugs. Okay, give me some more. You're not going to believe this. And it's not bankers and drugs. This is what blew my mind, okay? That's the first place I went, was the pharmaceuticals, because the ripoff is so extraordinary inside the pharmaceuticals. Bankers would be right there at the top of it. And this will blow your mind, because most of us can't stand these companies anyway, meaning the ones that, it's Comcast. It's the cable companies. This is crazy. So listen to this. The cable companies spend more money than, you got to separate them, than the drug companies, than the banks, and guess why? Because of our $200 boxes. What's in front of, this is a crazy number. So what's in front of the FCC right now is this, is that the boxes that we have, we don't need to get all these stations. So what they're trying to put through, which they're having a hard time putting through, is that, we can have a box, but everyone can be in the box. Well, guess what? If this goes through, this is going to blow your mind. If this goes through, Comcast alone will lose $20 billion a year in revenue. $20 billion. So they got us, the thing that's amazing about this is like, oh my God, when you think about it, so like I think my cable bill is $258 a month, right? But all of us are paying like probably $200, $178, anywhere around there. But isn't that crazy? That is bigger than drugs. Bigger than drugs. So they've been flying under that carpet for so long. You stay right there, folks. We'll come right back. Dow Industrials up 110. NASDAQ up 12. S&P's up 10. We're going to be right back.
If you're looking to discover a new financial resource and diversify your financial portfolio, consider the new Market Safe Focus Commodity CD from Everbank. This 5-year U.S. dollar-denominated CD gives you exposure to 6 equally weighted commodities, including gold, silver, copper, nickel, soybeans, and sugar, in one powerful CD. With annual pricing caps of 50% per component, you could earn up to a 50% upside payment at maturity if the commodities increase in value across annual pricing dates. And should the opposite occur, your principal is 100% protected. Keep in mind, returns are based on CD performance. There is no annual percentage yield or periodic rate of interest on this index CD. Don't miss out. Take advantage of this financial resource designed to grow with the times. The October 13th funding deadline will be here before you know it. So hurry over to everbank.com/TFNN for the CD's term sheet and other important product details and disclosures. Once again, that's everbank.com/TFNN. This advertisement is sponsored content. Everbank is a member FDIC.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
It's 2016 and TFNN has a brand new programming lineup to kick things off. Starting January 4th, Swim Lessons by Thinkorswim and TD Ameritrade will be airing 5 days a week at noon Eastern Time. Join hosts Scott Connor, Kevin Hinks, and Cindy Faber as they host their daily options program live at noon 5 days a week with no commercials for the entire hour. Nico DeHaan and Paige Clark will be moving their program, Living a Primal Lifestyle, to twice a week, Tuesdays and Thursdays from 7 a.m. until 8 a.m. Eastern Time. Wake up with Nico and Paige and start your day off right. The Bull Bear Binary Option Hour by Nadex will now be live Mondays and Fridays at 10 a.m. Start and end the week with the 3 hosts, Tom O'Brien, Tommy O'Brien, and Daryl Martin, as they break down the world of trading binary options and spreads. For all the details on the new 2016 programming lineup, visit the front page of TFNN.com. TFNN, educating investors.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. Dow finished up 110. You had the NASDAQ up 12. S&Ps were up 10.5. And if we do go overseas, let's go take a look at the overseas markets. Since the overseas markets are going to be opening in about 5 hours. If we go over to the Hang Seng first, Hang Seng was up $47 last night. You're trading at 23,619. And this is going to, this is going to be cool. Okay, so check this out. So September 12th in Hang Seng, we have a gap down September 9th. They have it on the 12th. That is where it's going to go for tonight. So this is going to be a great heads up for us in the U.S. Can the Hang Seng get into this 23,914 area? The gap, and this is awesome. The reason this is so awesome, folks, is that you always like to get as much information out of markets as you can. The Hang Seng, and we'll go through a few more of these, is set up exactly like our markets are set up. What you have is this. You have a high that was established on September 9th. The day was, if we're all on the same days, it would have been the same day, but September 9th. You gap down on September 12th. You went back and you try to make it into that level on September 22nd. And we're doing the exact same thing. So this is going to be so cool watching this shake out, because this will go for it tonight. So you're going to get a lot of information out of this tonight. The Nikkei, we go to the Nikkei. What Nikkei did last night was a sideways move. Down, well, you were down $218, but realistically, that's a sideways move. If we do look at the Nikkei, it looks to me like it wants higher price. And if the Nikkei wants higher price, what you're going to see, if we go to the yen, has been basically hanging at these lows. The yen is at 100.73. So what that means is that 100 yen, and let's say 100.75 cents to $1 US. And the way the yen's trading, the yen looks to me like it wants to get up to this 102, 104 level. So that's going to be pretty cool watching this whole thing shake out. Because when the yen gets weaker, the Nikkei gets stronger. And the way that the Nikkei is looking at this tonight, it looks like it, in fact, wants to get stronger. We go over to the UK. We take a look at the UK. With the UK, that was up $41 today at 68.49. And I guess this is going to test the highs too. There's not a lot of information on the UK. The DAX, different ballgame. We take a look at this DAX. What you have inside the DAX looks like a nice ABC down. Let me see if I have the volume from this afternoon yet. No, I don't. So I'll get the volume in the DAX in another couple hours. But the DAX looks to me like you get a small ABC structure on the way down. If we go inside the DAX, because of course what starts spinning all our markets down the day before yesterday was Deutsche Bank. Let's see, where is she? Right there. So Deutsche Bank right now is trading at $10.76 euros. This got down yesterday into the 10.18 euros. And I don't think this thing is done going down yet. So picture this. The CEO came out today, and the CEO was saying, hey, listen, we're going to keep selling off assets versus recapitalizing. They need money. That's the bottom line, folks. So one of the assets, this is pretty intense. Let me see if I can find this for you. Because they were selling off an asset today. It was Abbey. I think it's a banking structure. Let me just see if I can find this for you. And what was going on is that they were losing on the transaction $825 million. They had bought this asset. Bottom line didn't work out, and decided that, is that right there? 1 second. There it is right there. Okay, there it is. Let's see what this is. Deutsche Bank sells Abbey Life to Phoenix. Deutsche Bank, whose shares have once again been under pressure in recent days, has confirmed a deal to sell Abbey Life Insurance business to the Phoenix Group for 935 million euros. And out of that, I know I read it earlier, okay, so although the transaction will have a positive net capital impact, it's expected to lead to a pre-tax loss of 800 million euros, primarily as a result from the impairment of goodwill and tangible assets. So it's a huge number. Bottom line is that, so the CEO comes out, says that the capitalization is going to be from selling assets. We'll see where that shakes out. That Deutsche Bank doesn't look to me like it's bottomed yet, because what you have with the bottom is this. What you need with the bottom, let me pull this back up again so we can see this. Okay, so I'll put this on a weekly first, because I believe what we're going to see is that now what we're going to have is going to have a high volume. We're going to have a high volume low that has to be tested. What Deutsche Bank hasn't done the whole time as this has continued lower, it just hasn't had a sign of strength. It hasn't taken out a swing point, meaning swing high. And this is, I can just bring this back to January of 2014. That's when it was at $38. Watch this. If I bring it back further, this is pretty intense. So Deutsche Bank, before the collapse, was traded at $100. So this is where you get a banking structure. This is like a NASDAQ stock. NASDAQ stocks, in bubbles, of course, can go down 90%, and they do. This stock went down 90%. So the stock's under its 2008 lows rather, and it's down there with volume. This thing is going lower. So their problems aren't over yet. I believe what's going to happen is that they'll sell assets. Then what's going to happen, they're going to have to recapitalize. And, you recapitalize, the terms on the recapitalization won't be great. And it's like, okay, how much, what's the dilution inside the stock? Because the banks in Europe, they're not as strong as the banks in the U.S. And I guess the banks in the U.S., what is a mind blower is this: how can you run a business and you can consistently pay billions and billions of dollars in fines and still not only make money, but you make money and they pay dividends? If one thing that my eyes got open to in this whole debacle on the way down was, I always knew banks made money, but I never knew that you can pay 50, 70, $100 billion and still make money hand over fist. So it's like, before this, what the heck? Where the heck did all that money go before this? I mean, you talk about party on, man. I mean, if you're gonna, the partying on is just like over the top. And as one of our targets says, it very well could be the banks that bring the markets down again. This is the unfortunate part about it, and this is why it's important, folks, that we're concerned with it. The banks can bring us all down. That's what ends up happening, and the way that works is that you have legitimate businesses that are doing fine, and then guess what? They either don't get money, or they get hurt because someone else got hurt. And that's what that structure, that's how innocent businesses and people get hurt. Stay right there. We'll come right back.
TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile-based scanner in the industry. Powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com. Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
Hi, I'm Steve Rhodes, host of the Trader's Edge, heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
takes your phone calls. Now, toll free at 1-877-927-6648. Internationally at 727-445-1044.
Tom O'Brien. Welcome back, folks. And if we go take a look at the the Fed Fund futures rate that's for the percentage of traders betting on when rates will go up. Right now, in December, it's 54.3%. It's been fluctuating, folks. This is December 14th, between the 52 and 58. That being said, Mr. Kevin Hinks, he was telling us this morning. He's from TD Ameritrade, Think or Swim. And don't forget, folks, swim lessons are on TFNN every trading day, 12 to 1 Eastern Standard Time. He was talking about that this week. There are 7 Fed presidents coming out yapping. And sure enough, just in the break right now, so listen to this one. This is great. So this is Federal Reserve Bank of Cleveland President Loretta Meister said continued gains in the labor market this year. Her outlook for higher growth and inflation and receding global risk prompted her to call for an interest rate increase when policymakers met last week in Washington. She's talking right now, actually. If we continue to delay, even as we make further progress on our inflation goal and labor markets continue to tighten, we risk having to undertake a considerable steeper policy path later on, Meiser said in a speech. This is pretty cool. So they just released the speech. It said in a speech that she is scheduled to deliver tomorrow in Cleveland. Mr. Meister was one of the 3 voting members of the Federal Open Market Committee and to dissent in favor of hiking last week when policymakers elected to leave interest rates unchanged. In a statement following the meeting, the FOMC said the case for raising rates had strengthened, but the majority of officials wanted to see more evidence of progress in the economy. In her first public comments explaining her dissent, Meiser said she believes unemployment had reached its lowest sustainable level. Sharper hikes by the Fed could bring the economy's recovery to an end. She said, if we delay too long and then find ourselves in a situation where the labor market becomes unsustainably tight, price pressures become excessive, and we move rates too steeply, we could risk a recession. Bottom line, folks, it's going to be amazing watching this whole thing shake out. What you also had, if you saw this on Bloomberg today, let me see if I can, this was the Plauser, who used to be the head of the Philadelphia Fed. He came out today and he was just ramming the Fed, specifically saying that, hey, listen, you can't believe what they're saying. Let me see if I can find this, because the one statement was pretty cool, meaning in the aspect of he was making the case that the Fed was saying that they were data dependent. Yet last week, when they came out with this announcement, they couldn't go to one piece of data to show why they didn't raise the rates. And so what he was saying, and I thought this was kind of unusual for someone that was on the Fed for so long, that they have lost their credibility. Because if they're saying that it's data dependent, and in fact, bottom line, they have nothing to look at, well, it's going to be a problem. So it's going to be, coming up to that December time frame is going to be pretty wild. I suspect what we're going to actually see is that, and this will more than likely could be in the next few days, is that we're going to see these rates try to get higher again on their own. See, that would be the ultimate for the Fed. If, in fact, the 10-year started to move lower in price, higher in yield, and then the 10-year raises itself prior to that, because what would happen there is this, is that as the 10-year raises the yield, they could actually put the discount rate up 25 basis points, and it wouldn't necessarily send that 10-year, to the moon. Because what does happen is that you and I, we don't deal with the discount rate. That's what they're talking about. It's the discount rate between bank to bank. What does happen when the discount rate goes up, however, is that normally the whole yield curve goes up, meaning so that the discount rate goes up, the 2-year note goes up, the 5-year note goes up, the 10-year note goes up, the 30-year bond goes up. If we take a look at these aspects as to where they are in the last 3 months. Right now, the 10-year is right in the middle of its range. So the highs to the lows in the last 3 months, 1.35 is the low, 1.72 is the high. The last 6 months, this is pretty cool watching this shake out. The last 6 months, we're at the lower end of this. Because the red dot, if you're watching Tiger TV, the red dot is the average. The blue dot is where we are now. You can see we're below the average for the last 6 months. You take this for the year, and you really want to make sure you go get a mortgage right now or refinance. Because in the year, we're way below the average. You know, the high for this year, this past year, is 2.33. You know, it's not that brings the 30-year up dramatically, but let's put the 30-year up so you can see it. But what it does mortgage rate-wise, so the 30-year right now for the past year, the low has been 2.09%, the high is 3.11, and we're at the low end of that. Right now we're at 2.28. It's amazing, 2.28 for a 30-year Treasury bond. If we take a look at the 6 month, you're still underneath it, pretty good. 2.2% versus 2.7. If we take a look at the 30-year, the 3 month, you're right in the middle of it. So bonds, you know, I suspect that you know, we'll see whether the market can raise them. Some of the higher volume stocks out here today. This is what we had. You had Bank of America up 9 cents. Procter & Gamble caught a bid. That was up $1.10. Transocean was up 60 cents. Freeport-McMoRan was up 70 cents. Apple was up 86. ExxonMobil was a big mover. That was up $3.66. Let's go over and we'll take a look at the XLE. So the XLE, when the Saudis came out and bottom line said that they have a deal, and what you're going to have with that deal is the aspect of they're going to reduce 750,000 barrels a day. Exxon is going to go after the top again. It was down at the bottom of its range, which is $66 now. With game again is 71. Chevron, and that went up in a matter of 10 minutes too, folks, which is wild. Chevron went from a price point of $98 to $102. Pretty intense, fast, furious, all of the above. And, you know, we'll see how they handle the higher swing points. The oil contract itself, this is where it's going to get wild, like tomorrow morning and tonight. So the oil contract went to a high of $47.45. We did decent volume, too. You know, so it's like what the oil contract should be able to do is make the swing of 48.38. That's the number you want to look for, because if it can't make that swing high, it's trouble. It'll be big trouble. And we've talked about it before, because what hasn't happened inside the gold market, you know, let's go over there right now. What has happened on the last two times the signs of strength, it hasn't been able to make it to a swing point. And that's always a problem. You know, we had that nice sign of strength on the 2nd and on the 6th of September. We had an additional one on the 21st of September, and it hasn't been able to make it. That's always a heads up that someone's sitting underneath those swing points with monster supply. You stay right there. We're coming right back. And don't forget, folks, you can get us 24 hours a day right on your cell phone. TFNN.com, hit Tiger TV. And I'll come right back.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today. Tiger Real Estate Opportunity Fund is currently offering 4-year first mortgages on many of the fully renovated properties that it has purchased. The first mortgages are third-party appraised with a maximum loan-to-value ratio of 70%, providing a secured investment that pays a fixed return of 5% annually, which works out to a monthly income of more than $416 per $100,000 investment with your principal intact and secured. These 4-year first mortgages are perfect for anyone looking for a secured investment that provides monthly income much like a CD. For more information, email tigerfund@tfnn.com or click on the Tiger Real Estate Opportunity Fund banner along the right side of the tfnn.com homepage, or call our office directly at 877-518-9190. There's a limited supply, so act now.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Welcome back, folks, and you're going to love this. I wish I had just brought this up a little bit earlier. On Bloomberg, what they do now, folks, is that they have these top live feeds, and what happens is that they have reporters at all these meetings. And there was a press conference going on, actually, in the last half hour when in Algiers and about this OPEC decision. So check this out. This is intense. So one of the lines, OPEC decision was unanimous. Okay, that's the Algerian minister stating that. But check this out. This is where this gets really bizarre. That the deal is not done yet, and they expect that it'll be adopted by November 30th. Okay, check this. This is like amazing when this comes across. Okay, let me get this right. OPEC agreed to a preliminary deal that will cut production for the first time in 8 years. Oil prices gained more than 6% as Saudi Arabia and Iran surprised traders who expected a continuation of the pump-at-will policy. Let's see. So the next one, OPEC is going to open dialogue with non-OPEC countries and trying to, of course, convince them. And here's a quote from one of the reporters that are in it. This press conference is a bit odd. Nobody mentioned the terms of the deal yet. The ministers confirmed an output target on their way out of the meeting, but no mention from Algeria or the Qatar ministers so far. Even if the details are scant, here's some good analysis from the chief oil analyst at Energy Aspects. Even if the details are scant, it is clear that OPEC understands that it needs to cut output and Saudi Arabia wants higher price. And here's the kicker. The deal will be fleshed out by 30th of November meeting, but Saudi and other GCC states will take the lead on cuts. So the bottom line is that, they have a deal, but guess what? The deal's not the deal until there is a deal, and they don't expect that the deal will actually be done until the 30th of November, and we're sitting at the September 27th. So you can expect more huge volatility coming in this marketplace. There's no two ways about that. And that's why, oh, you gotta love it. The amazing part about this too is that come out at 10 past 2. Okay, well the room will come out at 10 past 2, and the official statement did come out as soon as our markets closed at 1 minute past 4. That official statement was saying that yes, they're going to do it, What I just read to you there, however, was live right there because that just happened at we're at 4:57. That happened at 4:37, our Eastern Standard Time, and that was live when I was just reading that to you, and that had just finished. So you can expect more volatility in this oil market because I think many folks are actually going to look at that and say, okay, we got a deal. Well, yeah, we have a deal, but now we need another 2 months in order to get that deal and put it under wraps. The market in general, folks, haven't for years trusted what the amount of oil they say they're going to pump. They've been cheating inside OPEC forever. The bottom line is that, yeah, they've taken everyone to the cleaners. And once they put OPEC together, you know, oil went up for a long period of time. But the other side of that is that they're pumping oil because you can imagine when you're even dealing with $47, $45, $50 a barrel, you start pulling back. Well, that's pure bread that is coming not into your coffers. And right now, those Middle Eastern countries need as much money as they can get their hands on. Remember, folks, you get us 24 hours a day right on your cell phone, TFNN.com. Hit Tiger TV. And always remember, folks, whatever you think about, you bring about. Whatever you focus on grows. And whatever you want in life, folks, visualize it like a nice big motion picture. Step into it, take ownership of it, and fly with it. Everything you need is right inside you, folks. Go have a blast with it. Have a great one. Have a safe one. Look forward to speaking right back here tomorrow morning, 8 o'clock. Wow! Go get them, folks.